Good day, ladies and gentlemen, and a warm welcome to today's earnings call of the Bajaj Mobility AG, following the publication of the first quarter financial figures of 2026. I am delighted to welcome CEO Gottfried Neumeister and CFO Petra Preining, who will guide you through the presentation, followed by a Q&A session where we would be happy to take your questions. And with that, I'm handing over to you, Mr. Neumeister.
Thank you very much. Good morning, USA. Good afternoon, Europe, and good evening, Asia. We are really happy and glad to be able to speak to you for the first time after a Q1 result. We have changed our historic pattern of only publishing twice a year, half yearly and full year, to now quarterly reports. And as said, this is our first quarterly earnings call, and therefore happy to bring this transparency to you. I think the whole company will also benefit from this increased transparency. Yes, of course, our competitors are closely watching and eyeing, but overall, I think it's the right and positive step. Let me capture first really the big milestones and achievement, and it's really good to finally being able to speak about our success. Some have felt it, and there were some feelings, and now to being able to present it to you really black and white with results and with a clear positive trend is very important for us, but not also for our employees, for all customers and everybody around the world who is watching and interested in how KTM and the Bajaj Mobility Group are performing. So in summary, you anyway saw the numbers which we have published. I would like to highlight two factors. Number one is we were able to more than double our sales in terms of units, plus 125%. If you look to the revenue went up even 150.1%. So we were able to increase our revenues even higher than we were able to increase our sales units. And this is a clear reflection that we are selling with less discounts than a year ago. We are bringing new motorcycles who are well received, and this leads to really a very pleasant overall situation that our dealers are making money again. They're selling also without discounts, and this is really showing in the top line that we have on one hand managed to increase the top line really substantially by, as said, more than doubling. We are showing for the first time since many quarters a positive EBITDA. So this positive EBITDA also reflects our operational recovery. And we have the motorcycle business, and this is maybe to already give you then an outlook of what we have done over the last year, was the focus on the motorcycle segment. So the result is definitely coming from the motorcycle business. We exited the bicycle business. You see only 1 million left coming from the bicycle business. Petra will lead you through the details later. Most importantly, our homegrown problem, the inventory reduction, continues, and we had also a very successful start in the motorsport season. In a nutshell, the headline for the restructuring was focus and simplicity. We refocused on our core business, the motorcycle business. We got rid of bicycle, as I just said. We got rid of the car business, the crossbow. We stopped distributing CF Moto and Chinese brands and focus on our own brands. And we also got rid of MV Agusta. So this is in the first bullet of refocus. Simplification is coming also through reduction of complexity. Here we are working across the whole company to reduce our cost. We started with our corporate structure, with our legal entities, which we are downsizing substantially. We have also simplified and cleared out our portfolio of motorcycles in the peak times. I think I've mentioned it in the last call. We had 184 models only in the motocross and enduro segment, and we have reduced it to 98 with hopefully, I don't know if you hear me knocking on wood, not losing out any customers and selling the same amount of motorcycles. But also the simplification of our model portfolio leads to cost reduction, even without headcount reduction, because all those motorcycles, you need to go to a test stand. With the street motorcycles, you need to do the homologation and all the tests. And by simply reducing it, it has a lot of positive effects. One is on R&D effort. On the other side, it's also working capital, where you don't have as many spare parts which you need to provide. You're producing more of the same, so you get also synergies in the production and the economies of scale. So this is also an important factor. Human resource, we announced at the beginning of this year that we had to lay off another 500 people. The good news for you is all the financial burden of the reduction, the one-offs, is already reflected in our Q1 numbers. And I think looking at bringing those then into perspective should give you also the confidence. So the social plan and all the notice periods which are necessary for the people we had to lay off are reflected. It was an important step to really make this company leaner and faster than ever before. We took out 2 management layers. We had a leading span of 1 to 2.4 before that step, and now we have a leading span of 1.6. So 1 to 6, sorry, not 1.6, but 1 to 6. So this has substantially improved and was an important step. The 500 people will mean a 50 million saving in 2027. On an annualized basis, we will see little bit less than half this year already in the second half of the year. So this is all to come when we look forward to further cost reduction. Inventory reduction, we see a separate slide, and therefore I don't want to spoil it. I just mentioned it anyway. We managed to continue to reduce our inventory. And last point, to reduce our cost. Overhead reduction, you see in 2024, when I arrived, we had more than 44 million per month in overheads. This added up to 532 million of overheads in year 2024. If you remember, in the best years, we had revenues of 2.6 billion, even with the ambition to grow to 3 billion. 532 million overheads was simply too much. We've managed in 2024 to reduce those overheads by more than 100 million, and we are continuing to do so. So this should show you the average amounts which we are targeting per month. So a very clear and sharp focus on overhead reduction. Maybe quickly jumping to sales. This is what I've mentioned. So we have a 2-tier sales system. We sell to the dealers, which is our wholesale. The dealers are selling to end customers, the retail. And what you see is that we were able to more than double our wholesales overall, 40,332 units compared to 17,915. You see the regional breakdown, where there is a substantial increase in Europe. North America still looking a little bit behind, but I can tell you this was more an product availability issue, not a market demand issues, and that's something which will change throughout the next quarters. Rest of the world also up by 7,451 units. The retail is with 47,374 at one of the highest levels the company has ever seen in the first quarter. We also managed to slightly go above Q1 25, which you have to factor in. We gave tremendous discounts, more than 160 million last year. We spent on discounts only to support our sales, subsidized sales, that we can continue to survive and to live. And despite this artificial boost last year, we were still able to not only hold the retail stable, but even increase retail numbers. So a very strong and healthy sign that our products are well received. The stock came down by close to 49,000 units in comparison to those quarters. If we look to the next slide, you see the historic development also on one end of the crisis. We have touched upon it again, that we unfortunately had ignored for 3 years the retail and oversold that market. Ever since we jumped on the brakes at the end of 2024, where there was no more sales happening, we managed to take out the first units out of the market. Overall, more than 100,000 last year, and you see that Q1 continues with another 7,000, leading to an incredible positive picture. I know there's a lot on this slide now, but if we start from the left, you see the historic peak values in orange are the dealer importer stock levels. In gray, it's our own stock, our group stock. So adding up in totality to close to 290,000 units. And you see now the development on one hand from that time to year-end, January 26, you see the ending stock of 2025, and we were only 19,834 units away from, let's say, a healthy or ideal stock. And you now see how close we're getting to that healthy target, which we have set ourselves, which is stemming from the stock turn, which we're trying to achieve on a global level, which would be in the long run north of 2 times per year. North America and Australia being at around 2, and Europe being able to get close to 3. Most importantly, what I've mentioned is that our products are well received, and therefore, at the moment, it's not here. You see how many new models we have launched only in the last quarter, from January to March 2026. The 990 RC Track, the 890 SMT, the 890 Adventure Rally, and a huge lineup of Dukes, smaller ones. All in all, as said, super well received on the market, and therefore there is this confidence both on the dealer level and also on the market is really coming back. It's not part of Q1, but we already introduced now in April and May also some lighthouse projects, our 1390 Super Duke RR and our 1390 Super Duke RR Track. So just to give you a flavor, what is coming, and there is much more like the Freeride E, which will be launched in the next couple of days. We had also a very successful and continuous success in our motorsport, and therefore the season 26 was really incredibly positively received with the start, the Dakar win of Luciano Benavides, but we in the meantime already won the first World Championship title with Billy Bolt. We're leading the MXG World Championship and the MX2 World Championship. Number 1 and number 2 is with KTM, so a very successful start, and we even had our first win in a MotoGP. We were also able to attract new sponsors. So in the middle of the MotoGP bike, you see Interwetten. This is a new sponsor. We have secured a long-term agreement, which really brings substantial funds into the company, and which is a clear reflection that people start believing in KTM again and believe in that turnaround story. I will now hand over to Petra to lead you through the financials, and then both of us will be available to your questions.
Thank you, Gottfried, and a warm welcome also from my side. It's always difficult to lead from motorsport and all the passions behind that topic into financials, but bear with me, I'll do my very best. The focus topics of Q1 were a lot actually, and all of them very, very positive. From what you have heard already from Gottfried, we are delighted to disclose the numbers of Q1 and begin with a revenue increase of more than 70%, to be precise, 70.2%. Of course, compared to a weak Q1 2025, but nevertheless, it's a reflection of all the strong efforts that are behind the sales department and all the other departments, from production to procurement, to allow us to sell that high number again to the market. Additionally, and as a consequence of that very positive revenue result of Q1, we had our very clear and strict cost control measures, which lead for the first time in a very, very long time to a positive EBITDA, and that's a reflection of the operational recovery. Our overhead cost year-on-year, so Q1 2025 compared to Q1 2026, show already a decrease of 8.5%. I have deliberately not taken out all the one-off effects in 2025, but neither in 2026. The negative one-off effect in 2026 coming from garden leave and the layoff of the 500 people is actually higher. So in the next quarters, we will see a very nice improvement of that number forward-looking. Also, a huge milestone that we were able to share already with you was the successful refinancing of the 550 million. Additionally to an increase of our factoring line, we have managed to increase another 50 million on the volume over the 100 million we had already achieved by the end of Q1 2025. That leads us to a very stable financial position. We currently, by the end of March, hold a little shy of 160 million in cash and unused credit lines. Lastly, a topic, an exogenous topic, which impacts not only us, but the entire world, is the Middle East war and the result of the geopolitical tension that we see, caused by the blockage of the Strait of Hormuz. For Q1, we had a little to no impact, but we, of course, see an increasing headwind. I'll come to it in a couple of slides. Coming back to Q1 and our revenue and profitability development, and bear with me, I've already heard that this slide is a bit messy, and I would like to focus your attention to the left-hand side. So quarter one versus quarter one 2025 versus quarter one 2026. We see an improvement of 70%, to be precise, 70.2%, with a very nice also improvement in EBITDA coming from -29% to a +2%. All that improvement, of course, is driven by the motorcycle and not the bicycle. The bicycle business has been given up. We have heard already, we have ceased that business. Please note that in the year 2025, and we will see that in all the quarters, we will also disclose in the following publications, there will be an impact in the year 2025 and no impact in 2026. The motorcycle business carries the entire load, and here we see a doubling of the amount of revenue that we have been able to achieve. That number differs now from the 151 Gottfried has shared before, because we include here also the PG&A, the parts, garments, and accessory business. Very strong signal, 100%, if you allow me to round it up, improvement year-on-year, which is a very strong signal. Going into details, and I have already said it today in our town hall. I take my apologies. Financial people are not so good in marketing slides. Actually, the third column, the comparison should be green, but we have a black and white presentation used here. All the KPIs show a positive trend, a significant positive trend, and that is a translation of the very hard effort. And trust me, we have been through blood, sweat, and tears in the last couple of months and quarters to allow us to show that result with you, and we're very proud. Even though, of course, we realize that the net profit is negative, but if you remind yourself where we're coming from and adjusted by the insolvency gain, just to keep that number on top of your head, the financial year 2025 EBIT adjusted by the insolvency gain was at -444 million in EBIT. That is already a huge improvement, showing a positive EBITDA, even as that hasn't been achieved for a very long time. The balance sheet shows stable total amount, so -0.2% deviation is almost on par with the balance sheet amount by the end of the financial year 2025. However, there is in between the balance sheet, there we see movement. Firstly, a reduction in equity coming from the loss that has been generated in Q1, and a reduction in cash. Please note that this is a usual trend in Q1. In Q1, we also usually pay our boni to the dealers. There are additional expenses that usually occur in Q1. This is a trend that is known and follows an historic pattern. But it also caters for the working capital increase by higher trade accounts receivable. Inventories remain roughly at par. We have deliberately decided to increase our PG&A stock because we are able to achieve very nice margins by higher deployment of inventory. This is a deliberate action. Plus, we have also pulled in orders in order to mitigate the Middle East situation when it comes to longer shipment terms. Equity ratio still at solid +22.2%, and a little shy of 240%. We go now to the cash flow situation. Again, all that improvement coming from top line and our efficiency gains translates, of course, in comparison to also a very strong signal. cash flow from earnings is significantly above the relevant quarter of the last year. Please note, however, in comparison of the investing activity, we had a positive one-off by selling assets last year in Q1, which impacts the Q1 2025 cash flow positively by 70 million. So if you take that into comparison, that of course distorts the picture in comparison to Q1 2026. Working capital as such will remain a focus topic, and please rest assured the 33.52% is not the ratio I will be delighted to show you in the upcoming quarters. In the midterm, we clearly target a ratio on or behalf 20%. For the time being, what the topic we tackle and we spend a lot of time on is the trade payables. By re-ramping the factory after insolvency, almost all our suppliers have asked for very high securities in the range of prepayments, and this has now been already depleted and reduced, but still is quite a topic we tackle. So we talk about reduction of prepayments, and we also therefore tackle higher payment terms. So overall, as said in the end of the year or beginning next year, we of course will aim to reduce that ratio significantly. Maturity profile and financial position, a slide we haven't showed you before, but I think it's important to show you our focusing on cash and unused credit lines. Due to insolvency, all the products has been taken off BMAG. So by 31st of March 2025, there were no unused credit lines available. We meanwhile have been able to regain the trust of the banks and have achieved the 50 million working capital line, which is undrawn. So 50 million unused credit lines over and above 108 million cash leads to a very strong and solid financial structure of a little shy of 160 million, which is a solid position given a company our size. Refinancing, I have already mentioned, the 550 million have been signed by early March this year, and given the terms that we have already disclosed, is also a very strong signal from the banks in the trust of KTM and BMAG and the management for the turnarounds that we are undergo. Factoring volume, I have already mentioned, another 50 million over above the 100 we had achieved last year already. And finally, the unused working capital line I've already mentioned. The maturity profile is the one which is ahead of us, and we will continuously show you the development of it for also the next quarters. One topic, I think, which gives quite a headache to the entire world. So it's a problem we share with almost everybody. The closure of the Strait of Hormuz has led to a significant supply chain disruption, an increase in energy prices, and an increase in raw material pricing. We so far have none to very, very low impact in Q1, but of course we see and anticipate higher prices when it comes to steel and aluminium, and also freight charges. At the same time, we currently undergo significant price reduction programs and efficiency programs, and we are very confident that we can mitigate those impacts. But nevertheless, this is something we are already foresee for the near future. The other topic, and I have already stressed that, is an impact on working capital. We have taken as a management the decision to pull in orders, meaning we invest in working capital by bringing in component orders earlier than initially planned, in order to stabilize and secure production here in Mattighofen. And by pulling in, of course, we invest in working capital. The graph on the left-hand side shows you the additional days our components or finished goods are currently taking. You might wonder why to the US it's only 5+ days and into Europe it's 20 days. For the route to the US, we have always been traveling around the Cape of Good Hope. To Europe, we have used the Suez Canal in the past, and now also use the longer route but more safer route. What we also do see is, just to complete the picture, that those suppliers where we source from in Asia that might have potentially higher effects on the Middle East crisis simply due to the lack of energy that might occur in Asia, or Asia might be more affected than Europe. Coming to my last slide, and I think the most important word of that slide is in the right-hand corner, top corner, and this is turnaround. The turnaround, which we are very happy to show you already in numbers, is in full swing. We have literally turned around every stone, have challenged every single process and topic within the company without jeopardizing the DNA of KTM, which I think is very important, and Gottfried stressed it at the beginning. We have undergone all the topics listed, focused on the brands and refined the profile, the go-to-market strategy, pulled in design into KTM, worked on supply chain efficiencies. Phoenix Measures is our cost-saving program. We tackled payment terms, we tackled the accounts payables as mentioned. We simplify the structure, whether this is headcount, fixed costs, or our structural costs, or the entity structure as such, and finally have re-established a very solid financing structure which allow us to support the growth forward-looking. So all of it, a very comprehensive turnaround program, which we have not only started, but we are in the midst of it, and we are very proud to show you the results that have already materialized in our numbers. With that, I have come to an end of our presentation, and I would hand back to receive the questions.
Yes, thank you very much for your insights, Mr. Neumeister and Ms. Preining. Ladies and gentlemen, now it is your turn. We are opening the Q&A session. For a dynamic conversation, we kindly ask you to ask questions via audio line. Please click on the raise your hand button, and otherwise you're also welcome to post your questions in our chat box. I see we have one dial in via phone. You can use the star key 9 if you want to raise your hand. And Miro Susak is the first one with the questions. Please allow. Yes. Hello.
Yes, hello. Can you hear me?
Yes.
Hello. I have a few questions. Just I'd like to take them one by one. The first one is on the cost structure. You mentioned the reduction in G&A, which you've achieved, which looks promising quarter on previous year's quarter. On the other hand, if you look at R&D cost, it actually is still gone up in Q1 to 21.1 million, and the run rate is basically not on a rate of improvement, but it should end 8.4. That just quadruple the first quarter. Can you comment on that?
Absolutely, with pleasure. Yeah, absolute right question. You have to take into consideration that in the first half 2025, and therefore also in the first quarter 2025, there was almost no R&D, I won't say improvement, but we clearly have come out of that insolvency phase and have now invested in that R&D bucket. You will also find costs for the Phoenix program, so the relocation of some of the components definitely is also or comes with a higher cost by tooling and relocation, so that those costs are also it can be found in Q1 2026 cost block, and also the cost for all the SOPs Gottfried has already presented.
Can you give a number for this cost line going forward? Is this the new flight level, or will it decrease in the coming quarters?
I would expect on R&D this is the new flight level. It will come down though by the cost reduction of the 500 Gottfried has mentioned. Those improvements you will only see in Q2. The garden leave cost and all the associated costs with social plan has been booked in Q1. So here you will see a relief, but this relief will apply not only to R&D but to basically all the SG&A line items.
Okay. Then I noticed that your inventory went up very little, but it went up. Is it true? I know you've showed the slide. It looks like it's not completely reduced, but still, can you comment on that? Is this a coincidence, or is there any further relief, basically further lowering of net working capital going forward?
So absolutely, I said there is working capital is a target topic, but more on the accounts payable. Absolutely right question. We see two counter effects. We see the inventory level coming down when it comes to finished bikes, but on the other side, we have invested in higher PG&A stock in order to support our customers with spare parts worldwide. Here we have been due to insolvency in 2025 on a very low level. And the other topic is that we have also invested in pulling in orders due to the Middle East crisis.
Okay. Then on COGS, the level in terms of sales was now at 80.6%. If I look back in the years back, it used to be at around 70%. So even before Corona, it was always around 70%. What will be a normalized level of COGS in terms of sales?
Yeah, I would think for the year 2026, this looks pretty stable. Forward looking, so in comparison to the previous years, we see a higher depreciation coming from R&D, simply because of the R&D efforts or the high R&D spend of the previous years, and with the SOPs that we are launching, those depreciation is deployed now into the cost section. But forward looking 27 and upcoming years, we will see an improvement driven by the Phoenix cost saving program when it comes to material costs. As we don't guide yet, I would keep that number now for myself, but there will be an improvement.
Okay, thank you. I go back into the queue.
Thank you very much, Miro, for your questions. And we will move on to Ankur Jain.
Yeah, hi. Good morning. Am I audible?
Yes.
Yeah. Hi, good morning, Gottfried, and good morning, Petra. This is Ankur, and I have joined the call from India. So first of all, thanks for giving us this presentation, and it is very heartening to see the fruits of your early efforts of you and your team, and they are bearing fruits. and I am confident that you will emerge out of this turnaround with flying colors. So my best wishes for that. I have a couple of questions. One, Petra, you talked about the effect of war in the Middle East. Could you also talk about how this war has impacted the early, sales that you see? I mean, the demand from the market that you see. Is there any decline that you see in the demand coming out from?
Ankur, so this one is really for me. Luckily, we don't see the decline on the market. Petra is, of course, always pointing out the potential risk for the future going forward. I can tell you that I'm very confident that even if the whole market would shrink, this does not mean that we cannot outperform the market, and this is what we always do. We have lost a lot of market share, and we have a great demand from the dealers and our customers. And we are really trying to be patient with our sales to allow the inventory to completely come down as Miro was anticipating. Yes, we have pulled in already in March. We ordered really also motorcycles from India. 7,700 were shipped. And all of April, unfortunately, they were supposed to come in April, and this is not management mistake. They only came on May 4th. So yes, we will see some shifts, but the overall demand is there. The dealers are really, as I said before, in a good mood. I'm happy because I think this is one of the big strengths of KTM, having more than 4,000 dealers worldwide, who have really suffered for quite some time. But now I'm already thinking of how can I set the incentive now to boost even more sales, because they're now happy, they make decent margins, they're selling without discounts, they don't have to finance inventory. So for them, for the first time, there is this relief. And certainly, and this is really the encouraging part, the demand is strong. We are outperforming in terms of registration. Most of our competitors were even responsible for the growth rates in certain markets because we simply haven't had products available last year. So we're gaining back market share. And overall, even if the market would go down 2%, I don't think this will hinder us from growing.
Right. Thank you. That is very helpful. And I also want to know, in your total sales, what percentage of your customers buy their motorcycles through the financing route? Some rough number would be helpful.
So we don't track it like Bajaj Auto, where you have Bajaj Financial Services and Bajaj Auto. We sometimes support financing to give special retail programs. This is different than to the past, where all the actions were focused on pushing out products and making the wholesale. And we have now changed and offered with Santander Bank in Europe, for example, also retail financing. But what we do there is that we simply subsidize the interest rate by certain percentage points. These are some like sales or marketing efforts we're doing, but we are not tracking it with our sales.
Okay, not an issue. Two more questions. One is on the motorcycles unit sales. I mean, this quarter we have sold 40,332 motorcycles. So just for clarification, does it include the KTM bikes and the Husky bikes which have been sold by Bajaj in India, or this number only?
No, thank you, Ankur. A very important question. We are always focusing in publishing our numbers, and when we talk about our sales, in clearly the sales the Bajaj Mobility Group is making out of here, and it does not include the units sold in India. So then this is really a substantially high number. It's a good input. We should, and I'm just looking at Petra, include that number going forward in the next quarterly statements, that you see the whole magnitude. And this shows you, and this was also an encouraging piece, that there was never in the last 18 months a question whether that there is a justification for KTM. Should it be still on the market or not? No. There is such a strong demand. To put it in perspective, I don't know if you saw Ducati sold in the last whole year only 52,000 motorcycles, and we now sold 40,000 without India, and I'm sure that we have superseded this in one quarter. We're closely behind BMW, who just last week published also their results where they're slightly above the 40,000, but we are really regaining and will be soon. But as I said, we're not growing for the sake of growing. First exercise, we need to become profitable, then we start to scale again. And this year is still a transition year where we're keeping ourselves disciplined to really allow the market to recover. What we tried to show you with the inventory slide is that at the end of Q1, our inventories levels should be really healthy again. And it's not only about absolute numbers of stock, but also that the stock is not aged and that you have the right stock in the right region. So a lot of that work is not visible to you, but we are really getting back on track, and we're keeping some scarcity in the markets, that the prices are coming up again. We never sell through a price. We sell through emotion. We sell through performance, through an USP, and we definitely want to come or get away from a discount brand.
Right. That's very clear, Gottfried. Thanks a lot. And now I have my last question, which is about the revenue. So this quarter we had revenues of 331 million euros, which is the total revenue. And the motorcycle revenues were 272 million. And then there were bicycle revenues of 1 million. So I wanted to know, if I reduce this 272 of motorcycles and 1 million of bicycles from the total revenue of 331, so the residual revenue, is it right to understand that this residual revenue is coming from the sale of spares and garments and other parts?
Yes, that's the PG&A, parts, garment and accessories, which is really a very profitable business, which we also able to grow. But this, of course, sometimes comes a little bit later. If you now sell in more units and you have a higher selling in units, some of this materializes a little bit later when you then sell the respective spare parts or technical accessories to those bags.
Yeah, thanks a lot. Very helpful and very clear. I have no more questions.
Thank you very much for your questions, Ankur. It's great to have you here from India. And we have a follow-up from Miro. You should be able to unmute yourself now. Yes.
Yes, hello. Can you hear me?
Yes, Miro.
I have some follow-up questions, if I may. The first one is on the seasonality of the revenues. So because we so far had only half-year sales, and now you switched over to quarterly reporting, can you guide us through the typical seasonality of sales during the 4 quarters?
Yes. I just wanted to say, as you know, but you obviously rightfully has pointed towards the fact that you don't know the quarterly, the past. Q1 usually is the weakest quarter in the season, or in the amongst the 4 quarters. There is a higher season at the end of the year, because due to shipment, a lot is sent over to the US or to Australia, and therefore sold from our perspective already in the last quarter. Usually Q1 is, as said, the lowest one. We have started high because of the market has been cleaned in the Gottfried has shared the details in the past. I would still expect that Q1 is a solid quarter, but on the lower end.
Sorry, just to ask you, you said you started high. What do you mean by that?
We started from our own, as we have disclosed it, 70% above the first quarter. So the market and our own performance we have overachieved our own expectations, which is good. But I would still think in the calendarization, Q1 is the weakest amongst the 4 quarters.
Okay. Which hints to even stronger Q2, Q3, and Q4. Good.
Correct.
Then, typically, I mean, you have some U.S. business or U.S. dollar business. Typically, what we see is that some companies also report like a constant currency growth. And in your case, with the bicycles going down, you could also argue that could even report on a constant scope growth or organic growth. Can you provide us some numbers in Q1, what like the organic growth would have been, or like the constant currency growth? How big the currency effect was?
We can add that, starting with Q2. From a pure financial position, we are naturally hedged, but your question leads towards the impact on the regions. We don't disclose the regional result in a P&L perspective. Therefore, we haven't done that yet, but I'm happy to give it a consideration for Q2. But we can look into it and can do a follow-up later on.
Okay. And the last one, will you provide us with like pro forma numbers for the new segments for the last year, or even for the quarters, the 3 remaining quarters of the last year?
We will disclose in close alignment with the legal team, disclose the quarterly numbers at each quarter. So the next one is pretty easy because you have half year 2025 and you have Q1 2025 now. So Q2 is I think already on the table. But going forward, we have to wait for each quarter to become actual, to disclose Q3 2025, and then we are in a normal cycle, and then we have all 4 quarters disclosed. So this is unfortunately from a legal perspective the approach we have to conduct.
So the 3 segments, off-road, street, and mini, you cannot share already today what 2025 the sales have been, or the split between the sales or something.
Okay. Sorry, then I misunderstood your question. We have the only segment we have is the motorcycle, the bicycle, and other. And other is the holding. So this is how the BEMA is structured. We don't disclose there is no segment called mini. We disclose sales numbers, but not from a P&L point of view.
Yeah, and also off-road, street, you did not split up. You just had motorbikes in the past.
Exactly.
Right?
Exactly.
And you cannot provide the numbers before in 12 months, basically.
No.
When you will release.
Yeah.
Full
We'll
year
have to wait till it comes extra. Yeah.
Okay. What we usually see with other companies is that they provide pro forma figures. So maybe you can talk to your legal guy again. Should be possible.
We'll try.
But anyway.
We'll try. But yeah.
Okay. Thanks a lot and all the best.
Welcome. Welcome.
Thank you, Miro. And with that, we're coming to the last question in our chat box. Hello, could you, even though you do not give an explicit guidance, allude on margin potentials? Are historical ratios still valid, or has something structurally changed so that margin levels before the crisis cannot be reached anymore?
So I'm looking to Petra because it's also a financial question, but I could clearly, Mark, thank you for that question. Nothing has changed that we should not be in the position to reach those levels. We always want to positively surprise rather than negatively. So we have given ourselves some time before we start guiding and before we really start disclosing a midterm, which should show you the gradual increase in margin over the next coming years. But definitely, we are planning and have this as ambitious managers to come back. There are external circumstances like tariffs, if they are only, not long-lived, and if it's only a short effect in one year or the other, yes, we have to fight them, but all our competitors are also facing them and those challenges which maybe they bring from one year to the other, but definitely we should be able to come back not only to old levels, but for me, historic cost levels are not a benchmark. The company has grown substantially, got too complex, too many business models. So if we're now focusing on our core, if we're streamlining, I think, especially on the cost side, we need to become more efficient, and there's potential. And alongside, we will have to see what is the product mix in the future going forward. Are we able to enter into new markets? We have little bit touched upon that we're working also on a new platform in next 2 years to come, where we address a total different market. So definitely appetite is here to grow again and to also improve the margin substantially.
Thank you. And to follow up from the person, could you also go into the details of seasonality between off-road and road? And what are the capacity utilizations in Mattighofen and in India currently, and how fast could they be increased?
At the moment, we are running at 100% in Austria, which is but only a one-shift model. So we said we want to be and stay efficient with a one-shift model. The demand is high. We have already some outlook to add additional volumes in the second half of the year, which potentially would lead to some lines working in a second shift. I'm trying to fight it against and try to squeeze out as much as we can out of one shift, because I think, complexity then again goes up, but demand is there. So to answer your question, we could very easily double our capacity in Austria. I'm looking to Petra. We are not guiding production volume, so she's shaking her head. I'm not allowed to tell you, but I'm just giving you a feeling. I would say 2/3 of our yearly production volume is produced in Austria, and 1/3 is shared amongst our international partners. Could you also go into details of seasonality? So now for us, the off-road season starts. We will launch the model year 27, which is now distributed to the dealers. At the end of the year, there will be EICMA. We will definitely present a complete new off-road generation, which will be a step change, the model year 28, where the first factory bikes will be seen at EICMA in November, because we need to send them for homologation purposes to the US, otherwise they cannot race. There will be something coming. We are internally working, but that's a longer project to streamline the seasonality, because now we are producing in one peak the off-road season and in one peak the street season, which is a burden to our suppliers and dealers alike. And therefore, in the future, this is one of our projects to streamline also the production and smoothen out the seasonality. So spotted another one, if you scroll up, by Ankur, and I think then we need to come to an end. Is it the peak debt figure, or will the company require more tranche of debt?
We are very happy with the refinancing that we have achieved. We definitely look very closely at total cost of capital. Therefore, our overall target is to reduce debt forward-looking, and that should give you also the idea that we have been able to refinance 550 million at a very, very favorable rate should give you guidance that we are solidly prepared to repay those funds in the given time. That we could have also achieved that rates, and therefore I don't expect significant increase in debt. Depending on the growth structure of the company, there could be some change, but overall, from a gearing perspective, I don't expect an increase.
So appetite is there to pay back our debt as quickly as possible, and of course we need to show the strong cash flows in first place. This is what we will try to show you throughout the rest of the year, that we're able to generate those and that we are also able to really repay our debt.
And with that, we therefore come to the end of today's earnings call. Thank you for your interest in Bajaj Mobility AG. If you have any further questions at a later date, please feel free to contact Investor Relations Stefanie Kniep. A big thank you also to you, Mr. Neumeister and Ms. Preining, for your presentation and your time. I wish you all a successful day around the world, and handing back over to you, Mr. Neumeister, for some final remarks.
Now, final remarks is, it was really thank you for spending the time with us. We're looking forward to speaking to you in the near future and showing you continuous progress on what we're doing in 2026. Thank you very much.
Bye-bye.